the 24th of January 2024. Okay, news events. Today I'd like to talk a bit about the China stock rout right over here. This is news that is getting quite a lot of momentum right over here. So this is something that I want to talk about today. So first of all, since the onset of 2023, the Chinese stock market experienced a significant downturn. The China index dramatically fell from a peak of 14,431 to 10590. Now, this downtrend, however, began much earlier. And if you look back, it's way back in February 2021. And since then, from the February, right, till right now, the combined market value for both the Chinese as well as the Hong Kong market has, basically $6 trillion has been erased from the market. That's how much, how big this thing is. That's why I call it China stock rout. Now, in a recent move, Citic Securities, China's largest state-owned broker, has attempted to mitigate this decline by halting short selling for some clients in mainland markets. Mainland here is referring to China. Now, this is part of a broader series of market interventions by the authorities, and these interventions include state purchases of bank shares, but yet effort so far has not been successful in reversing the market downturn. And last year in 2023, the sovereign wealth fund Central Huijin Investment Limited increased its stakes in the four major banks. Bloomberg has reported so far that Chinese government is contemplating the establishment of a state-backed stabilization fund to purchase shares. And despite these measures, and signals there's no significant recovery in the Chinese stock market so far, right? So why the Chinese market is tumbling right over here? Let you know a bit. Number one, they have to deal with the property crisis issue, where the China's property sector, a significant part of its economy, face severe distress. This is something that everybody has experienced already before, and leading property developers like Evergrande encountered financial difficulties affecting the broader real estate market and investor confidence. Now, apart from that, we have the geopolitical tensions. We all know that China is having an ongoing tension with the United States and some other countries as well. And this is partly due to trade disputes and other political issues have impacted China's economy. This has led to uncertainties in the international relations and trades, unfortunately. And other than that, you have the Taiwanese issue also. So this is something that we will be seeing in the foreseeable time, right? Other things is that there is also a severe decrease in foreign investments. Amid these tensions and uncertainties, foreign investors have become more cautious about investing in China. This retreat has been exacerbated by regulatory crackdowns in various sectors. We have seen that in the education sector. We have seen that in the technology sector right now. Okay, so this too, especially technology, really created a lot of fear of people investing inside China. And the second crackdown on the internet, specifically in the gaming sector, a month ago, did not aid President Xi Jinping's call to revive investors' confidence. Right, what they did was that they passed a bill to prevent people from overspending when it comes to gaming and stuff like that. So that created a lot of fear, because this kind of controls, like, don't want people to do too much games. It is good for the people, the population in general. But when we talk about business, it's a different case. It's not good for business when you come and and do so much of this regulations, it spooks people out, especially when you have a local company that is one of the biggest gaming company in the world, like Tencent, right? So obviously Tencent Holdings led 80 billion sell-off in some of the China's biggest online games. So this is one of the issues that, it's not so, I would say, not so good that's happening right now, that's creating a lot of fear over there. Other than that, there's this diminished confidence among local businesses, where the combination of strict regulatory actions and the property market downturn, as well as the COVID-19 related disruptions, have impacted the confidence of local businesses. This in turn affects investment and economic growth, right? So recent steps have been taken by China to uh, to assist in this ailing market. What happened was the People's Bank of China, the PBOC, have committed to implementing macroeconomic policies adjustments, and these adjustments could entail measures as reducing interest rates, lowering reserve requirements to boost liquidity, right? So when that happens, you have credit growth, and then that hopefully will bolster the overall economy. Okay, so and in 2024, the Chinese government has vowed, like this year, to adopt a proactive fiscal policy, and this strategy signals an intent to increase government expenditure to stimulate economic growth. I mean, this is also done in the US all this while. Now, remember the market stabilization program, right? So as part of this effort, policy makers are planning to mobilize about 2 trillion yuan. That's roughly equivalent to 281 billion US dollars. And this sum primarily sourced from offshore accounts of Chinese state-owned enterprises is intended to stabilize funds. And these funds will be used to purchase shares onshore operating through Hong Kong exchange links. Okay. Additionally, they have announced that at least 300 billion yuan, which is about 42 billion US dollars of local funds, have been designated for investment in onshore shares. Okay. From the second quarter of 2023 to the present, there has been a significant outflow. I've looked at the outflow data from Bloomberg, and we have a total until now, second quarter of 2023 until as of the current moment, right? We have 173.7 billion yuan, which is about 24 billion US dollars outflow that happened. Okay, so the other things that strategies will be announced in the near future, these additional measures. So I'm looking at what's happening on a daily basis. We are getting all this news that's coming out from China to see, and this is one of the reasons why you are also seeing that the Aussie dollar, it's coming down, as well as the New Zealand dollar. These are commodity currencies. So if China, one of the biggest clients in the for Australia, they're not doing well, so will the Australian dollars, right? Okay, so what could be done better apart from the steps taken? So I've looked at the whole thing, and the first and immediate step should be to stabilize the property sector, because it's a major pillar of the Chinese economy. Measures of providing liquidity support to major struggling developers, ensuring the completion of pre-sold projects to protect home buyers' interest should be sped up. The key word here should be sped up, and perhaps revising some of the 3 red lines. And when we talk about the 3 red lines, that refers to the debt policy constraints to allow more flexibility for real estate companies. Okay, so this is one. And the second thing that is really a thorn among all investors is the rapid and unpredictable regulatory changes that has been a significant concern for both domestic and international investors. The government could focus on creating a more predictable regulatory environment. Clear communications of policy intentions and a roadmap for future regulatory actions would help in restoring confidence. Things like, we have the Chinese announcing that, we want to take steps to regain the investors' confidence. I know they've been talking about that for the stock market to get investors in, and 1 week later, they announced this particular regulation that they want to stop on online, too much of online spending and this kind of things, and straight away that affects companies. So that really spoke the market. It's just like you say, what we don't mind you announcing all these things, but let people know in advance what you want to do, and not out of the blue you just announce things. Out of the blue you announce things that isn't just, and China, they are very fast in executing things, right? So this kind of spooked a lot of people, and should be improved if they really want to invest in gain back the investors' confidence. Okay, so with that, that's the end of the fundamental report.